Hello everyone, my name is Soumya Shukla and I'm a student of MCOM, Department of Applied Economics. And today I'm here to discuss about the topic price movement. Price movement refers to the change in the price of a financial asset such as stock, commodities or currencies over time. These movements are typically driven by various factors including supply and demand, economic news, market sentiment and geographical events. Price movement can be classified into two major trends. The first one is upward movement, which is also known as bullish trend, when prices increase over time, signaling confidence in the asset. The second one is downward movement, which is also known as bearish trend, when price decreases, reflecting a decline in market confidence. Understanding price movement is essential for trader and investment. Various factors including supply and demand, like prices rises when demand for a stock exceeds supply and fall when supply exceeds demand. Second, market sentiment, investor confidence, news and media. Third one is economic indicator. Fourth one is company performance for stocks. Earning reports like merger acquisition changes can trigger significant price movement. And the last one is technical analysis like charts, pattern, trends, etc. News technologies or disruption, example cryptocurrency, artificial intelligence can significantly influence market trend and prices. Since India gained independence in 1947, the price movement, especially inflation and the cost of living, has been influenced by various factors like economic policies, war, oil prices, and global event and domestic demand supply dynamics. Here is a brief overview of India's price movement and inflation trend from independence to the present. First one is 1947 to 1960s, that is post-independence era. The challenges in this period are post-independence India faced severe force shortages and the country's economy was largely agrarian. There were severe supply chain issues and poverty due to partition. Several drought in the 1950s exacerbated food shortages. Inflation. Inflation during this time was moderate but it varied depending on agricultural output. The 1950s saw an average inflation rate of around 3 to 4%. Price movement. Prices of basic commodity were relatively stable due to government control and rationing, but they were sensitive to monsoon and agriculture production. Second one is 1970s, that is oil shock and inflation stage. Challenges in this period were the 1971 war partition Pakistan and the 1973 oil crisis dramatically impacted India's economy. India faced its major inflation crisis driven largely by raising oil prices and increased government spending. Inflation in this period was inflation peaked during the mid 1970s, reaching rates above 20% in 1974 due to the global crisis. Food prices surged due to supply constraints, pushing the cost of living, as the highest inflation rate is 28.60. Third period was 1980s, that is there is moderate growth and controlled inflation. Challenges in this period were India's economic policies were inward looking with heavy protectionism and import substitution industrialization. The government started adopting more aggressive fiscal policies leading to higher public debt. Inflation was decade average around 8 to 9%. However, price control and subsidies helped keep certain essential goods affordable. The fourth one is 1991, which is economic liberalization. The challenges in this period are in 1991, India faced a severe balance of payment crisis which forced the government to undertake significant of economic reform. The liberalization policy opened up the economy, reducing trade barriers and increasing foreign investment. Inflation. Inflation briefly spiked in the early 1990s due to currency devaluation and the removal of subsidies, reaching over 13%. However, by the mid-1990s, inflation came under control, hovering around 7 to 8%. 2000, which is high growth and rising inflation. Challenges were India experienced high economic growth rate driven by reform, a booming IT sector and growing investment. However, inflation became a growing concern, particularly due to high food and fuel prices. Inflation during the decade was volatile, averaging around 5 to 6%, but spiking during the global financial crisis in 2008 and later due to food prices inflation. In 2009, inflation surged due to double digit due to bad monsoon season and rising fuel prices. 2010, inflation moderation and economic shock. Challenges were inflation began to stabilize, especially after the Reserve Bank of India (RBI) adopted inflation targeting as a key part of its monetary policy. Key events like demonetization in 2016 and the introduction of goods and service tax (GST) in 2017 affected the prices temporarily. Inflation averaged around 4 to 5% during the later half of the decade. The demonetization shock briefly reduced inflation as consumer spending soared, but GST implementation led the price fluctuation. And the last one is 2020, that is pandemic and supply chain disruption. Challenges were the COVID-19 pandemic severely disrupted supply chain, causing price increasing in many sectors, particularly in food and healthcare. Global energy price fluctuation and geopolitical events like the Russia-Ukraine war led to higher fuel and commodity prices. Inflation spiked in 2021 to 2022 due to this disruption reaching around 7 to 8%. The RBI has been working to bring inflation down, focusing on core inflation and using policy tools like interest rate hikes. Long-term trends. Over the long term, India's inflation has trended downward from the double-digit rises of the rates of the 1970s and early 1990s to more moderated in the 2010 and 2020s. Price movement have been significantly influenced by global commodity prices, domestic policy decision, and external shock like war, pandemic, etc. Thank you.